right, let's talk about the mystery charts and the methodology in action. One question that I get fairly often is why do we only risk 2% per trade? And a few people are like, 2% is a lot. Do you have to risk that much? And I'm like, no, no, absolutely not. And if you're newer to trading, and one thing I was talking about earlier in a webinar I did with Jeffrey Gibby over at Metastock earlier today in the Traders Forum, is that we're risking 2% per trade, and that's if you're stopped out on the trade, not 2% risk. And we were talking about how we scale out and everything else, and 2% is plenty. And the main thing we're talking about is that if you're newer to trading, risk less money, maybe risk 0.25% per trade, and then widen your stop out. That way, you're not losing as much, and you're, I wouldn't say guaranteed, but you're more likely to catch a few big winning trades. Anyway, so getting back to the 2%, this stock had gone mostly higher, mostly green for quite some time. This is SGMO recommended last year and last November. And you can see it pull back to the 30 EMA, nice little Landry-like pullback. And there's all the parameters there. So the entry was here, stop was here, and the initial profit target was up here. And then, of course, if you're on the trading service, as you know, it did implode, unfortunately. And it had a 54% haircut overnight. Well, shit happens. You know, and sometimes I laugh and people are like, oh, how could you laugh? I lost money. It's like, well, I lost money too. So laugh to keep from crying. So what's the damage? Well, remember, we were only risking 2% on the trade. And when you add it all up, even though it was a 52% haircut, the stop was very wide in this particular case because that's what it called for. So we ended up with fewer shares. Yeah, it's 2,200 shares or whatever it was, but it's a lower price stock. So after all was said and done, we're down 2.62%. So a little bit more than that 2% number, but not enough to kill you, as the old hedge fund adage is, he who fights and runs away lives to fight another day. So yeah, it sucks, but you're going to be able to survive. And I'm not going to say that the most you will ever lose is 2.6% on a trade, because you will get whacked every now and then. But the good news is the way the methodology works, as you probably know, if you've been following me for the last 20-something years, I hate to even add up how many years it's been. It's so scary. It just went by like that. We only want to lose no more than 2% on a trade. I can't guarantee you won't ever lose more than 2% or 2.62%. But the good news is we allow ourselves unlimited upside, and every now and then we catch a really, 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 really big winner, and it covers a lot of 2% or even 2.6% losses. So that outlier is definitely important. Now, I probably should have taken this out. Somebody, because it salted my wounds too, but somebody had pointed out, and this is what we talked about in the last week of charts way back last December, is that he puts in a standing order, and maybe for extended trade, and maybe these crazy issues like this, super high in volatility and low in price, that might not be a bad idea. I haven't done it just yet. I've done it quite a bit, as I said when I did this presentation a few weeks back. I do like to do this at IPOs, and I think that reasoning, because IPOs can be so volatile and take off and they come right back in, might be worthwhile for stocks like this. So I'm learning from my clients in the process, and I think that was a good idea. That's something that he does. Anyway, we talked about that in the last one. Now here's a mystery chart reveal. This was HNST. It's been a while since we've done these presentations. You can see nice little pullback there, a double top knockout kind of set up. Double top knockouts where you have a minor double top, and then the market pulls back. In this case, it wasn't a knockout move per se, but if you kind of use your mind's eye and put these 1, 2, 3, 4, 5 red bars together, like a weekly bar just on those 5 bars, it'd be like a nice little knockout type of move. And then it sold off a little harder, so that's a continuation of that knockout right here. But anyway, those were the parameters. Entry was here, stop was here, initial profit target was up here, and you can see that it didn't trigger, and then I took it off of the list. And we'll come back to this one in just 1 second. So no trigger, no trade, and that's something that I'll talk a lot about in a few minutes. Now, as I preach, discretion over the long run can really help out. And discretion is, it's not throwing caution to the wind, but in a case like this particular stock where the stop gets nicked by a few cents, especially if it's on a bit of like an opening gap reversal, then it's okay to stick with the position. Now, there's always a trade-off in trading, and that's why they call it trading. So you could say, well, Dave says this is a stop nick, so I'm going to stick with it, and the next day you could come in and the stock could actually implode on you, obviously. So that's a trade-off. Now, the what you hope happens, I don't know, you got to be careful in trading, use the word hope. But what you hope happens is it bottoms out and then takes off again, and you're still along for the ride. So in this particular case, the stop was at 440, and it dipped right below it, and then it began to rally a little bit. Now this chart's 1 day old, but so far it's kind of bumping along those lows. And if it takes out those lows with vigor, then obviously I'm out of the trade. But it's not looking so hot so far. Okay, this is a crypto trade. I think I've talked about this a little while back. And as I say quite often, when you're trading crypto and the market's moving, which it hasn't really been moving that much lately, okay? But when it's moving, sometimes you could just buy them as they're making new highs. And that's what I did with this Ripple. And I think I've jinxed myself before with Ripple. I think you might have heard me say in this presentation, I've never made a dime in it, but I finally caught a decent winner here. The entry was here. Now in crypto, in the stocks, if you notice, next time we pull up the spreadsheet, or part of the spreadsheet, I should say, you'll notice there's a column off to the left, and that's the percentage of how far the stop is away. And one of you guys asked me to put that in a column, and I gladly did so, just so you can get a feel for the stops and how they vary with the price of the stock, and then the distance of how far away the stop is on a point value, how that changes a lot of times percentage wise. And if you're trading a low price volatile issue, that percentage might be 30% or even more. And I think that SGMO is like a 40% stop, which sounds ludicrous. But remember, you're adjusting your share size down accordingly. And that's a bit of an outlier as far as a stop that big. Rarely do you use a stop that huge. But anyway, in crypto, just to keep the math easy, because they often move so fast, I'll just use a 20% initial profit target. And this one hit it after a couple days, and then look what it did. It did absolutely nothing for a long, long, long time. And as I've said before, one thing that I've been doing kind of just for fun, for S&Gs, is when these shit coins, these altcoins, SHYT or altcoins, I trust them about as far as I can throw them, which I guess they could technically be on a USB drive, and I don't know how far I could throw that, but anyway, you get my drift. But what I do with them, if I make money off of them, I feel like Bitcoin is something that's a little bit more real, and a lot of people have trouble wrapping their head around it, but I think it's worth something as long as enough people agree it's worth something, and enough people right now agree that it's worth around $100,000 per Bitcoin. So I think it's becoming legit. I got to be careful not to listen to Michael Saylor too much and not to confuse the issue with facts. But what I've been doing for fun, as I've said 1,000 times, is I take a little bit off every time I make a profitable trade, and I put it in Bitcoin. And not a whole lot. I mean, years ago or a few years ago, whatever, I was doing a lot more pulling off, and now it's only like $25 in these trades. And these are I'm doing the altcoins with a very small account size. I got 3 small brokerages, and this is not my bread and butter, but they're a lot of fun to trade, and I think it's something that's worthwhile. And I'm getting more and more into the crypto over time. But anyway, 20% initial profit target, and I mine off, so to speak, a little bit of those profits and put them into Bitcoin. And one thing I got thinking about was, okay, what if you hit 100% profit target in these things? Now, there's 2 schools of thought. Let's say you just had a full position on, you didn't take profits. At 100%, you take off half, and then you've got a position that's 100% paid for. You've got a free position, outright position. But what I'm doing instead is more like the core methodology, taking those partial profits and then bumping the stop to at least break even. And at 100%, it doesn't happen that often, but every now and then, I'm peeling off a little bit more. I'm not scaling out in a major way, just such a small way that it's almost meaningless, but then that little crumb is going into Bitcoin. So this is my version of Bitcoin mining. It's my shitcoin to Bitcoin strategy that I'm working here. And it came fairly close. It hadn't quite hit that yet, but I do have a resting order in place. And sometimes they just spike right out really fast and come right back in. So you definitely want to have that resting limit order in place for your profit take. You can see this is what I want to show you here. Notice that it just kind of died out forever, but that's okay. This is what I call not dead yet money, kind of a throwback to Monty Python. And if you watch these shows, you'll notice that I'll do a lot of dead money reports. Just because this thing goes sideways doesn't mean that I feel like I need to get out. I need to get out if I'm stopped out. And I like to see each position to its fruition. Now, this was back, again, middle of December, during the last presentation, and we were doing the crypto analysis, as we'll do live here in a few minutes, and it just kind of jumped out at me. This was a new crypto pair, or whatever you call it, shitcoin, and it was beginning to take off, and it kind of reminiscent of an IPO that comes public, flattens out a little bit, and then begins to take off, and it had patterns for that too. But I like the way it was moving higher, so I went ahead and put on a trade in the middle of the webinar. And fortunately, there's all the trades right there you can see. And I think I cleared about 100 bucks and change. Nothing to write home about. But I was able to mine off a tiny little piece. Once again, I've accumulated a tiny little piece of Bitcoin. Now, if that Bitcoin ever becomes something substantial, either through repeating this process over and over again, or Bitcoin goes to the moon or whatever, then I probably need to manage that position on more of less of a hodl, hold on for dear life type of move. Now, in general, I don't believe in hodling, and I'm just kind of doing this little experiment for fun. And, if I get a decent amount in Bitcoin, 6 figures or something, then by all means, I'll manage it as I would a trade. And remember, as I preach, and I said this earlier in the webinar today, all asset classes will lose at least 50% of their value at some point in your lifetime. It's kind of interesting. I think if I ever talked to Michael Saylor, I'd ask him about that, because he's a hodler. And it's kind of interesting that I think MicroStrategy, we can pull it up in a minute, actually lost half its value not that long ago. So I thought that was kind of interesting. But anyway, the entry was there, and again, we did it in the middle of the webinar. Go in and watch the webinar. It was Dave Landry's Week of Charts, and again, I think it was on 12/19. And the initial profit target was here. This little green line in the back, you can't see it, but it's right here. And then it stopped out on the remainder. And then I put in here, normally I would mine off $25 to Bitcoin. And the reason I didn't do it in this particular case was I'd fat fingered an order a while back, and I bought more than I needed to. So every time that one of these trades comes through, I was like, okay, well, that's $25 towards that fat finger. Instead of erasing it, because it wasn't a whole lot of money, I said, well, let's just let it run and see what happens. And luckily, knock on wood, the Bitcoin has never gone below that fat finger level. Anyway, so that's the Bitcoin trade, crypto trading. Sometimes you can just buy the ones that are going up. I'm going to go through this quickly. These zone lines, again, are 50-week closing high based on that. So 0% would be right at the 50-week closing high. The green, which is a great zone, means you're within the 5% of the 50-week closing high. And then red means you're, what's that, light pink or whatever, means you're more than 5% away. And then, of course, if you get down in the hot pink zone, that's the danger zone, you're 10% away from the 50-week closing high. So there's the rules there. I've kind of beat the dead horse in the system, so we won't spend a lot of time doing this. But that was your last sell because you closed 10% below or more the 50-week closing high, and you also are below the 50-week moving average. Now, the buy side, again, a little bit more stringent. You need 2 bars of Landry light, and you go long. And this is a weekly chart, FYI. Really simple system, but it's become fairly popular. And some people who've been around a lot longer than me and know a lot more about market time than me have actually said this is as good as anything. And that's the thing about trend following. And I like my stuff, don't get me wrong, and I think my stuff is fantastic, but all representative methodologies look alike, okay, and act a lot alike. I think my money management, my stock selection, at least I hope, or the hybrid approach to the trading, the trend trading, longer term trend trading, and the money management along with that, and hopefully stock selection make my methodology a little bit superior to just kind of like a run of the mill type of thing. But if you, especially like a mechanical system, they're all going to pretty much look and act the same. They're all going to have horrible drawdowns, and your accuracy is going to be low with a pure mechanical system like this in longer term trend following. And that's why, and I know I beat the dead horse on the turtles, but that's why a lot of the turtles blew up after the fact. They were in the right place at the right time. They caught some fantastic trends. Not to take anything away from them, because I'm a little jealous. That'd have been a lot of fun, I would imagine. But a lot of them had a hard time repeating that performance afterwards. And as I've said before, and I didn't mean to go off this tangent, I always do, but as I said before, even the turtles themselves doing the project realized, or whatever you call it, the experiment, they realized that they were risking too much, and Dennis actually shut them down, and then they throttled their risk way down, because longer term trend following, accuracy is abysmal and drawdowns are abysmal. But this particular trade, this last trade here, worked out. So you would stop out, and this is actually should be a little bit lower. This sell would be right below this high pink zone. So normally the sell is 10% or more, or I should say normally the moving average is below the 10% line, but now the moving average has caught up. So the 10% line would be your sell signal. Okay, so if you're 10% or more away from the 50-week moving average based on where the P's are now, you want to get out. Now, this is kind of shocking to me. As ugly as the market seems and feels, we're still within that 5% zone. In fact, we're only about 2.5% away from all-time highs. So I find that fascinating. The breadth is bad, but we'll get to that in a second when we get to the market. But so far, so good on a weekly basis. Again, for S&Gs, as I said quite a bit, I took this NASDAQ trade, and here, actually the Qs, and here you can see the sell would actually be below the 50-week simple moving average. I guess like right there, you can see the moving average was above the 10% line, so you would have sold below the moving average, but now, or I should say below the 10% line, okay? But now the moving average hasn't caught up to the bottom of the zone just yet. And the moving average is just a whipsaw filter, as I've said 1,000 times. And I use a simple moving average because I actually want a little lag built into the system, just the opposite of what most people claim they do. So the sell would be below that 50-week moving average and below the zone. I was thinking when I went live, it's like, do I really need to cover this every week? And it's like, yeah, I think I should. So hopefully, and I just said hope, I know, but hopefully 5 years from now, I'm still showing this one trade, and you could see the walkthrough for the entire period of time. So anyway, I'm kind of shocked, or as shocked as anyone, how well it's worked so far. 61% move, 195 points, and it was just 100 shares. And when I put it on, it was kind of an S&G type of thing. And I had no idea it would make such a great run. So I'm pretty excited about this. But right around a little less than 20K on that move. The drawdowns have been pretty big. I don't have the drawdown chart on this week, but there was some $8,000 drawdowns, at least one $8,000, I think one $6,000 drawdown in the trade. And the reason I talked a lot about that is if you are going to be in that longer term trend following mode, you have to take the good with the bad. And yeah, 61% is beautiful. An extra 20K, who couldn't use that, right? Especially nowadays. But in the process, you have to be willing to give up a lot of that money. And that's just longer term trend following, like the hokey pokey. That's what it's all about. Landry 100, I rebooted this, I think back in July or June, maybe May. It was last summer sometime. And years ago, I tracked this list, and the software was outdated or whatever. They stopped updating it or selling it, and it made it a little bit more difficult. And there was other reasons too. I think we went into like a extended choppy market, and it just was a pain in the ass to keep up with. But anyway, I rebooted it for S&Gs, which is kind of scary because could be a harbinger of a top when you start messing around with this extreme momentum type of stuff. And I'm just buying brand new highs. That's it. New 52-week highs. And if the market conditions continue to worsen, I might have to drop that new high down. I remember when I did it years ago, I think I was down to 90-day highs looking for new stocks. But right now I'm at 52-week highs, and I seem to be finding just about enough stocks to keep 100 in here. But they're all bought at brand new highs. And this is the RKLB, and this was bought on 9/25/24. By the way, I started publishing this to my Facebook group and the raw symbols, and also I have a direct link. I was not aware of this, but if you right click on this, or just became aware of this, if you right click on this, you can share the watch list to other people who have TC. So if you have TC, I can share it with you. And those in Facebook group, every so often I'll put it out in the group. But anyway, so on 9/25 is when I put it in the Landry list, and that was right on this breakout bar right there, if memory serves. And that's been a pretty good run. It's actually was 185%, and that's to where it was today. So this arrow should be like right there. Now I'm looking at it. This was 200% and change run, so that was very impressive. This APP has done really well too. You can see 240%. So there's a few triple digit gains in here. I took out one a couple days ago. I forget which one it was, but it was at 100% gain, and that was kind of cool. And there's zero money management in here. Now this is not real money. I did experiment with it a little bit. And one thing I found out doing this in real time is really hard to watch these stocks. And what's a killer is one will go up 30% one day and then down 30% the next day, or 60% the next day. It's just absolutely crazy. Pretty easy to run this on a hypothetical basis. A couple times I've thought it'd be nice if I had an extra million around, just close my eyes, or pay somebody to run it for me. Maybe just give them the stocks, like, here, take a look at these stocks. This is what I like to see go in if possible, and take out the other ones. But when momentum works, it's the most amazing thing in the world. The problem is, and I've tried to solve for this for years, and it's a bit of a holy grail hunt, is it ends badly, okay? And like I just said, on some of these, you're up 30% one day and then down 50% the next. But if you're going with a huge, broad portfolio like this, and a lot of these are really super speculative, but you're spreading that risk around, you're going to catch the occasional 100, 200, and beyond move. So I think the most I've seen so far was a 300% move. And believe me, there's a lot of stinkers. I took out one yesterday that was a 50% loss. So you do have a lot of stinkers along the way. One thing I've been thinking about, I think if you did this in real time, I'm wondering if you should take off, and you're selling winners, which goes a little bit against the grain of what you're supposed to do. But I'm wondering if you took off half when you're up 100%, if that would be a viable way of doing it. That way you've got a completely free outright position on the remainder. It's just something I'm thinking about.